Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is December 8th, 2025, and we're diving into the latest earnings report from Toll Brothers, the nation's leading builder of luxury homes. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Toll Brothers has just released their fourth quarter results for fiscal year 2025, and there's a lot to unpack, from their revenue performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Toll Brothers reported a net income of $446.7 million and earnings per diluted share of $4.58 for the fourth quarter. Home sales revenue came in at $3.41 billion. John, how does this compare to last year?
While the net income and EPS are slightly down from last year's $475.4 million and $4.63 per share, respectively, home sales revenue increased from $3.26 billion. This indicates a strong demand for their luxury homes, despite a challenging market environment.
And what about the number of homes delivered?
They delivered 3,443 homes, a slight increase from 3,431 homes last year. This steady delivery rate shows their operational efficiency and ability to meet market demand.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of $4.87, but the actual EPS came in at $4.58. John, what can you tell us about this miss?
The EPS miss of 29 cents can be attributed to the delayed closing of the sale of their apartment living business, which was expected to contribute to their earnings. Despite this, Toll Brothers managed to meet or exceed guidance across their core home building metrics.
How significant is this miss in the broader context of their performance?
While missing the EPS forecast is not ideal, the overall performance, including strong revenue and operational metrics, suggests that Toll Brothers is still on a solid footing. The market might react to the miss, but the fundamentals remain strong.
Strategic initiatives and market position. Moving on to strategic initiatives, Toll Brothers repurchased $249 million worth of shares and announced the sale of part of their apartment living portfolio for $380 million. How do these moves position them in the market?
The share repurchase reflects confidence in their stock value, while the sale of the apartment living portfolio allows them to focus on their core business of luxury home building. This strategic refocus, along with a 9% growth in community count, positions them well for future growth.
And what about their land holdings?
They control approximately 76,100 lots, which supports their growth plans. This extensive land bank ensures they can continue expanding their community count and meet future demand.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Toll Brothers reported an adjusted gross margin of 27.1% and an SG&A margin of 8.3%. How does this reflect on their operational strategy?
These margins indicate strong operational efficiency, with Toll Brothers effectively managing costs while maintaining high-quality standards. Their ability to generate $1.1 billion in operating cash flow further underscores their financial health.
Looking ahead, what guidance have they provided for fiscal year 2026?
They are projecting an 8 to 10% growth in community count, which aligns with their strategic focus on expanding their footprint. This, combined with their robust land holdings and operational efficiencies, suggests a positive outlook for the coming year.